I still think I'm right. I still think those reasons, the recession, the rate cuts, even without recession, the global macro context, global south buying gold, all that stuff, is extremely bullish for gold. And that's still ahead of us. That's still, the catalysts that I was expecting to bring gold to where we are now haven't happened yet. So starting from where we are now instead of 2000, I think makes it, it embarrasses me to put numbers on it, but it's a very positive direction for gold. This is a theory. I can't prove it, but this is my theory. I think we're starting to see this reallocation that Rick has been talking about for a long time. And instead of going, inevitable or even imminent, I think we're seeing it happen now. And if that's right, I think that's a really powerful mover for, not just gold, but the gold stocks too.
Gold is seeing fresh bullish momentum following relatively dovish comments from Federal Reserve Chair Jerome Powell and weaker than expected inflation in the Consumer Price Index. Annual inflation rose at its slowest pace since April 2021. Lobo Tiggre is the founder of Louis James LLC, specializing in resource investing. Based on fundamentals, Lobo Tiggre states that the surge in gold prices, despite unfulfilled bullish catalysts like recession fears and rate cuts, suggests even greater potential for gold in 2024. He further believes this shift is a powerful catalyst for gold and gold stocks. The gold miners' stocks are surging again, breaking out from recent months' consolidation. This strong midsummer price action is confirming their interrupted upleg is still growing. It should have a long way to go, with gold stocks still relatively undervalued relative to gold. Meanwhile, Tiggre acknowledges that China's significant household savings, driven by the weak yuan, will continue to boost gold demand, signaling a strong future for gold. The PBOC announced no gold reserve changes in June, leaving its total holdings at 2,264 tons, unchanged for 2 consecutive months. Gold's share in China's total official reserves remains at 4.9% in June. During the first quarter of 2024, China announced net gold purchases of 29 tons, a 1.3% rise in holdings. Despite its industrial correlation with copper, Tiggre mentions that silver is now aligning more with gold as a monetary metal. Silver surged to over $32.50 for the first time since 2012, marking a nearly 45% increase in US dollar terms over 11 weeks of trading. Although the rapid ascent has tempered, silver closed last week in London with its strongest Friday finish since reaching an 11-year high in late May, showing a modest decline of only 2.2% from the peak set that weekend. Now, we present the clips of Lobo Tiggre's insights from his recent interview with Investing New. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
I made a big deal about 2023 was the year of uranium, 2024 was the year of gold. So people are asking this, oh, gee, you were right about gold. What next? This isn't, a breathtaking original thing, but it's the answer to your question is the reasons why I was bullish on gold have not yet happened. So partly I'm saying is, being right for the wrong reasons is not being right. So no, this isn't what I expected. The good news is I still think I'm right. I still think those reasons, the recession, the rate cuts, even without recession, the global macro context, global south buying gold, all that stuff is extremely bullish for gold. And that's still ahead of us. That's still, the catalysts that I was expecting to bring gold to where we are now haven't happened yet. So starting from where we are now instead of 2000, I think makes it, it embarrasses me to put numbers on it, but it's a very positive direction for gold. What's really interesting to me, and this is me arm waving, this is me pounding the table, this is my equivalent of that, is that the fact that I'm still bullish for all these reasons ahead of something that's already moved gold, that's really interesting to me. I think there is, I've called it a new buyer in the space, and people are saying, well, it's China, but the last 2 months China hasn't reported buying any gold at all in the central bank. And yet here we are still very near nominal all-time highs. So it's not just China. Oh, it's India. Well, I think it's not so simple. I think we're starting to see not just inevitable becoming imminent. We're at Rick Rule's conference, and that's the Rick Ruleism. Don't confuse inevitable with imminent. I think we're starting to see something Rick has talked about with you and others many times, this global allocation in portfolios to gold historically over the decades has been around 2%. And recently it's been around 0.5%. Like Barbarous Relic, it's a pet rock. The pet rock school of economics has won, it seems, the gold debate, and people just don't want no gold anymore. I think that what we're seeing is that changing. And maybe it doesn't go back to 2%, but if it even just goes back to 1%, that doubles the investment demand for gold from where we are now. So if I'm right, just look at the headlines since gold pulled a hockey stick this year. It wasn't a new war. The latest war was last October, right? It wasn't the central banks from the global south buying. They've been doing that since the Fed weaponized the dollar. And it clearly wasn't just China. It didn't buy, according to China anyway, it didn't buy any gold the last 2 months. And here we are. This is a theory. I can't prove it, but this is my theory. I think we're starting to see this reallocation that Rick has been talking about for a long time. And instead of going, inevitable or even imminent, I think we're seeing it happen now. And if that's right, I think that's a really powerful mover for, not just gold, but the gold stocks too. So I think that's what's happening now, not just inevitable, not just imminent. I think that's happening now. If I'm right, yeah, gold is still there. But the difference answer is silver is there as well. And silver has been, and I get hate mail for this, but it's just the facts, right? Silver has been more closely correlated with copper than gold in recent years, over the last year in particular. So its industrial side is clearly a more powerful force in the market. And it's a mistake to just ignore that and say, no, silver is money. Okay, yes, silver is money, but it's moving like an industrial metal, and you ignore that at your risk. So I think it's very important that it has now changed. That market dynamic has changed, and it's moving more strongly with gold again as a monetary metal should, which kind of comes back to something has changed in the market that I was saying earlier. So I think it's fantastic, not just good. I think it's fantastic news for silver and long-suffering silver bulls out there that it's acting as a monetary metal should. So this isn't just a theoretical thing. Like I did not have silver on my shopping list at the beginning of this year. It was gold stocks. And, at the beginning of this year, uranium was $106, and I was looking for a pullback. So it wasn't even uranium. It was just gold at the beginning of this year. So the update now is I've added silver as well.
Lobo Tiggre distinguishes between recession and market crashes, emphasizing the Fed's role in potentially boosting stock markets during economic downturns through monetary easing. However, he favors precious metals amid economic weakening and suggests uranium's recession resilience makes it a robust investment compared to commodities like oil. The US dollar gold price tends to peak multi-year after fully discounting a recession's economic, fiscal, and monetary consequences. This usually happens in the latter stages of a recession, but before the recession has ended. Unlike a year ago, the cyclical gold bull market was anticipated to peak in the second half of 2024. The extension of the current economic cycle and the delay in the recession suggest that gold's bull market will likely persist until at least the second half of 2025. Regarding silver projects, Tiggre acknowledges the existence of promising discoveries, but highlights significant political risks in many regions. He believes it's challenging to find silver stocks that meet all criteria for investment due to these risks. Let's get back to the interview.
The problem isn't that there aren't any, great silver projects out there. This last cycle, enough money has gone into the ground that, there are some legitimate silver discovery or silver primary. Of course, silver is always a byproduct. Or even in a silver gold mine, there's still going to be gold in there. And in most of the so-called pure silver mines, they're really galena mines, lead sulfide or sphalerite mines with a lot of silver in them. It's not that there's no great discoveries or projects out there. There are some, but most of them are basket case countries going the wrong direction. With all due respect to our host here at the Rural Symposium, I'm just, I guess, genetically allergic to political risk. I hate it when mines get nationalized or commodities get nationalized or mining bans get put into place. And these sorts of things are on the table in our neighbor to the immediate south, where unfortunately many of the world's great recent silver discoveries are located. And other silver jurisdictions, Bolivia, Peru, they're deeply problematic. So finding, I've got a whole team now looking for this. It's not that there's no silver stocks out there. There's not on sale, but one that ticks all the boxes that I can be really excited about. I've bought one since I started buying silver stocks again I've only found one that's made the grade. And, but we're looking. And due diligence ongoing, rock kicking ongoing. I just came back from seeing a half a dozen companies in the Yukon. My team is fanning out into the field as we speak to see what else we can turn up. There's a thing to tease out here, and that people often will say, "Oh, it's a recession, so there's market crash," and everything. Those are not the same thing. A market crash and a recession are not the same thing. Sure, a recession or realization, that capitulation, realization of recession, has historically caused market downturns. But the Fed has been training the markets to see bad news as good news. Right? This isn't new. You've talked to any number of people about this, right? I could see where that capitulation, this realization, oh my gosh, we really are going into a recession, are in a recession. That could make the S&P and the NASDAQ hit new, even higher all-time highs, because the assumption will be, and they wouldn't entirely be wrong, the assumption will be easier monetary policy. The assumption will be, recession, the Fed's going to loosen, and so that could actually work out in their favor. So where I'm going with this is, don't assume recession means, we're going to have a market crash. If we do have a market crash, yes, everything gets whacked, including gold and silver, including the gold and silver stocks. But like 2020, very sharp V-shaped bottom, 2008, silver took longer to recover in 2020, so that's the Darth Silver thing. But the answer is, if we do get a crash, then I think that's a buying opportunity. That is absolutely a dip to buy in gold and silver, monetary metals. Like industrial metals could take a longer while to recover depending. But I don't expect that. My outlook, my base case is not actually a market crash this year. My base case is the data weakens, and at some point people realize, holy beep, we really are looking at recession, and then the money helicopters fly again. So it's not like we go through the ringer. It's like it becomes obvious that we're going through the ringer, and then the powers that be step in. And that's hugely inflationary. At that point, we will have had that shock, and I think oil and copper and industrial minerals will be cheaper. So you'll have a cheaper buying opportunity plus the upside, and that's what I'm looking for. Monetary metals, I think, stay strong throughout. And then the one outlier, of course, is uranium, which, unlike oil, is more recession. Like we've talked about this before, and I've always said, well, nothing's recession-proof, but uranium's recession-resistant. Well, I've actually done the math now. I looked in the last 4 recessions. Uranium went sideways or up in 3 out of 4 of those. So that's actually a pretty good track record. That's math now. It's not just a feel. That's like uranium is a much better bet than oil ahead of a recession.
The latest Kitco News Weekly Gold Survey shows industry experts nearly unanimous on gold's bullish prospects for the coming week, while retail sentiment is also firmly in optimistic territory. How do geopolitical tensions influence your investment strategy in precious metals like gold and silver over the next year? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.